Well, Rahul Sharma, the Director and Head Technical and Derivatives at JM Financial Services, joins us on the show. Hi, Rahul. Good morning. 2025, hopefully it's a good year. Wishing you, your team, your family a very, very happy new year. Well, you normally join us and you normally give us that one kind of a data point that you're stressing on. What's it this time around? The FIs are net short. So what is the data point, if you could tell us? And also, what are the levels you're looking at on the Nifty for this year?
Yeah, thanks, Nigel. So, the good thing is markets have somehow managed to create a higher low over the last few weeks, and the 23,263 low that we formed in December seems to be intact. Now, this will remain a crucial level as we head into the big, the weeks where we have a lot of events. We have earnings, we have the US, president taking charge, plus also the possible rate cut happening in the first week of February. So I think incrementally markets should get better from here. 23,700 is a crucial support for this week, as markets will try to find their feet after once we start getting into the earnings numbers. And on the upside, I think slowly, gradually, we should be. So two levels in mind: 23,700 for this week, and the panic low that we had formed in December remains a crucial, all-important level in case you were to create long positions at these levels. Now, the technical setup is indicating that we are on the way up. There could be a bit of volatility, which is something there. And secondly, the positioning of the FIIs continues to remain short. That should get challenged once we cross 24,200. So 24,200 once gets taken out, may happen this week, may happen next week. I think the next stop for the Nifty should be at 25,000, which could be a short covering move, which can take the markets higher. So all in all, look to be a buyer on dips, look to buy around the support levels. And we feel that, over the next few weeks, markets should do well from here.
Rahul, L&T, what is the chart telling you?
Yeah, so Larsen and Toubro has been sideways for the last few months, in fact, almost a year now. And this sideways structure is more of a technical, box that it has created on the monthly charts. Now, you could be an investor in this stock. We feel that the stock has got long legs. So, in fact, this is also one of our stocks for the year 2025, which can deliver a return of north of 20-25% on the upside. So one can look to buy L&T at these levels. I think the risk reward is very much favorable. This also is part of the capex theme that is expected to do well over the next few months. And technically speaking, I think this stock has got legs up to 4,500 on the upside. So 25% upside broadly. L&T remains our top pick from the capital goods space, which can outperform the market going ahead from here.
By the way, just taking a minute away from this interaction, just to point out that there's a lot of weakness in PSU banks today. Union Bank is down 6.5%, Bank of Baroda is down 4.5%, PNB, Central Bank of India, IOB. So the entire PSU banking pack, look at that, 3%. That's a crunching blow on the PSU banking space. The Bank Nifty relatively is better. Bank Nifty is down about 0.7%. I just want to put out, I think we'll get Abhishek as well to recap some of the updates, because BOB reported, numbers over the weekend, the Q3 update. Union Bank's update I was looking at, sequentially deposits are down. Even year on year, the deposit mobilization is just 3-4%. So very, very anemic compared to some of the other private sector names. We'll put the spotlight on them in just a bit. But Rahul, coming back to you, and banks is really what I want to talk about. I mean, slightly more medium-term perspective. Because this banking move has been a non-starter. You get a couple of good days, a trading bounce here and there on some names, but that big bank move, that's completely eluded the market in all of 2024. What do you see ahead?
Yeah, so at this point in time, clearly Bank Nifty is at a make or a break level. 50,500 to 50,000 are the twin supports for the banking index. It also happens to be the 200-day EMA support for the banking index. Now, clearly, the follow-up buying has not happened in the private banks. We saw them do well in bits and pieces, but eventually, they have to give these big breakouts, which have not happened as of now. So I think the best strategy at this point in time is to switch to NBFCs. NBFCs have done relatively well. In fact, the 21st November lows are still intact in something like a Bajaj Finance. And I think over the next 12-month period, this is one stock where you could keep your eyes on. This stock is something which can come out of the last 3 years of consolidation that it has been. In fact, the stock has been broadly sideways over the last 3 years. and the breakout could very well take us, north of 25% in the same. So, there is a triangle pattern, as you can see on the graphs on the long-term charts. And this has shown resilience over the last few trading sessions. The kind of volume-based buying that has happened is clearly indicating that strong hands have entered into it. And I think if I were to bet a money on one NBFC stock which can do very well, I think it could be Bajaj Finance. So rather switch to NBFCs as compared to what is happening in banks. Maybe wait for a better day and a breakout confirmation. Once that happens, that would be a better play at that point in time. But at this point in time, I think it is Bajaj Finance. It looks pretty solid.
Well, valid point you're making out there, and it's out of the blocks in a flash. It's the top Nifty gainer for this calendar year so far. What are the ultimate targets you're looking at on Bajaj Finance?
Well, technical projections are coming around 9,000, but I think 8,600, 8,700 is where one could look to, look at a target as, which is approximately around 20-25% from these levels.
All right, and the one that has defied gravity in the last few years has been Gravita. The stock pulled back a little bit after they raised some money, but you believe it's good for more. I think that's one of the top picks you have. What are the targets out there?
Yeah, so Gravita is something which is more of a continuation play. The stock did fairly well in the first half of 2024. Post that, it entered into a consolidation correction, time correction, if I may call it. I think, the stock has got a 40% upside from these levels and can be bought at current prices. It has got a pole and flag pattern on the weekly and the monthly charts, which it should, provide continuation in the current uptrend. So I think this can recycle into a new trend, and one can look to be a buyer in this, especially if you have a 6 to 12 month kind of a time frame. This stock can be the best performer of the all the stocks that we've discussed today.
And SBI Life, Rahul?
Yes, so this is one of the bargain plays. So from the insurance pack, this is one stock which is available at a long-term support line. So, as you can see, 2020 onwards, there has been a rising trend line. The stock has taken support over there twice. I think, at these levels, the risk reward is very favorable, for a fresh upside. And, one can look to buy in this space for a potential upside of around 30%. So, insurance play plus the budget also coming up, I think there could be triggers. But at the same time, technically speaking, the risk reward is very, very favorable. And one can look to buy at these levels for an investment perspective.
Okay, all right, Rahul. Thanks a lot for joining in. I think the call that you are making is buy on dips in the near term till the lower levels get violated. And as we